shocking retail sales number. Again, retail sales were really the important economic variable this week, and the number is quite shocking. We should talk about what Fannie Mae and also what MBA has to say about the housing and mortgage market. We have some comments from Philly Fed President Hawker that we should talk about, but let's just jump into retail sales. Retail sales are obviously that monthly number that allows you and I to get a feel for how the consumer is doing. Now, always remember that retail sales are a nominal number. They are not adjusted for inflation, so we'll do that together. It is important to understand that in order for the economy to really get into a recession, retail sales has to be certainly weak and probably a negative number, right? Consumers make up 65% of the economy. So what happened today? Well, retail sales on a month-on-month number were up 0.7%. Higher than the expectation of 0.3. So that is a double. That is a beat. Now remember, it's a nominal number. So okay, great. It's a nominal number, Michael. Help us understand what it means in real terms. Because again, you're buying a tank of gas and the tank of gas went up, so retail sales went up. That's why sometimes it's important to adjust for inflation. So hey, what happened? Well, if we take the CPI headline reading, which we got last month, which was 0.4, you now take 0.7 minus 0.4 and you get a real retail sales growth of 0.3. On an expectation of negative 0.1, right? So the expectations was a nominal 0.3. If you take the expectation of nominal 0.3, you minus 0.4, you get a negative 0.1. So if you put it in real terms, expectations was for consumers to pull back. That was the expectation. They didn't. It was another positive number. Retail sales are still strong. You and I clearly believe that the consumer is starting to crack. Maybe we'll see it in the subsequent months, but again, it is the holiday season. You and I both know people love to pull out the credit cards in the plastic during the holiday season, so I just don't know. But again, retail sales, surprising number. The consumer as of yet has not cracked. We'll just have to keep moving forward. What did Philly Fed President Hawker have to say yesterday? Again, remember, these are the themes that are important to you and I because we have to get to the number, meaning the Fed terminal rate, and then we could start to cleanse the system with higher for longer. So what did Hawker say? We are at a point where we can hold rates. Folks, sometimes Fed presidents have this way of saying something and saying nothing at the same time called Fed speak. I think all of us could agree that that is a pretty clear comment. We are at a point where we can hold rates. I don't think there is any ambiguity in that statement. Hawker, in another comment, believes that inflation will go under 3% in 2024. I think that is a reasonable assumption. He believes there will be no recession. I'm not in that camp. Unemployment will peak this year, so the next 3 months at 4% and get as high as 4.5%, so kind of back to pre-pandemic levels. 4.5% is not, certainly not horrible unemployment, right? When I was going to school 30 years ago, full employment was actually 6%, since lowered to 5%. So 4.5, still, it's not great for the folks who are unemployed, but it's also not 14%. So something to think about there. What else can we talk about? Let's talk about Fannie Mae. Fannie Mae has put out their quarterly opinion on home prices for 2023 and 2024. I think these are interesting. So for 2023, remember 2023 is almost over, right? We've got like 2.5 months left. Fannie Mae raised their price expectations for 2023 to 6.7%. Now, in context, what does that really mean? Well, simply, I think it was 90 days ago, maybe 60 days ago, their expectation was 3.9%. So think about that. In the span of about 60 days, Fannie Mae, who gets a lot of loans from across the country, they have come out and said, you know what, we think we're going to end the year up 0.67%. That's wild. That's wild. Wasn't this supposed to be the year that the home prices were going to crash, as so many were calling for? I don't think 2023, frankly, is that interesting. It's almost over. I am looking at 2024, right? 2023 is almost baked in the cake, right? You get a contract in escrow today, you're not closing probably till early December. So again, this year is almost over from a housing transaction. But what do they think about 2024? Up 2.8%. Up 2.8% based on what Hawker said earlier is about the inflation rate. So again, if you do the whole inflation nominal versus real, you may have a flat real housing market as far as values go, according to Fannie Mae. Doug Duncan, who is the chief economist at Fannie Mae, and somebody, if you're in housing, you should follow Doug Duncan. I've been reading his stuff for about a decade. He is very measured and a good economist. Doug Duncan says, we did 4 years of transactions, aka business. He said business, I'll say transactions, in 2 years. And now they are forecasting transactions total of 4.8 for this year and 4.8 for next year. Folks, we're flat. We are going to be flat. We have talked about that for about a year now. In fact, on Thursday, we are going to get existing home sales that I called 60 days ago being below 4 million. This is the time we go lower. Redfin CEO Glenn is wrong. We're going lower. We're going lower. Transactions will print lower numbers. How about the Mortgage Bankers Association, also called MBA, Mortgage Bankers Association? First and foremost, they are trying to rally the troops. It's been a very tough year and a half in the mortgage business, no doubt. The MBA is forecasting that 2024 will be better than 2023. I certainly hope so. Just you and me, I certainly hope so. For the folks in the mortgage business. 2024, they are expected volume to increase 19%. 19%. What I really like to do is get somebody's forecast and then look at the logic and see if I agree with the logic. I think arguing a forecast without these other variables is nonsensical. So let's not worry about MBA's 19%. Let's review what are their assumptions. And you and I can discuss if we agree or disagree. Number one, MBA thinks that the Fed will cut rates 3 times next year. That many. I think they're wrong. But who knows? We'll find out. They think that the 30-year mortgage rate will end 2024 at 6.1%. I think that's a little low. I'm in the 6s, but not low 6s. Let's see. Then what do they think for 2025? They think that mortgage rates will be 5.5 in 2025, 30-year mortgage. I haven't thought that far ahead. Maybe. I think maybe. I don't know. I haven't thought about that one a lot. And then finally, their last assumption is unemployment peaks at 5%. Remember, Fed Hawker said 4.5. So again, that's a meaningful jump. That's like what, 10% higher? A little bit over 10%. So again, they expect unemployment to be 5% by the end of 2024. So again, Mortgage Bankers Association sees a 19% pop in transactions. They are expecting 3 rate cuts. They are expecting mortgage rates at low 6s, 6.1. I don't know. I don't see it. But let me know in the comments below. What do you think? Do you think the Fed cuts 3 times next year? And what do you think about mortgage rates at 6.1? You know what? Let's have some fun. Let's get some interaction. Let's get some comments going. Why don't you guys take a wild guess on what you think the mortgage rate will be at the end of 2024? So about 14 months from now, Leave a comment below what you think mortgage rates will be. This will be interesting because some of you are going to say like 8.5, 9. And then some of you are going to say like 5. It is going to be very interesting for me to read the comments to see where everybody is at. So leave the comments below. I would love to hear from you. Ooh, somebody got 4.9%. This ought to be fun. All right, leave comments below. That'd be great. Next up, remember, we are hosting an event with 11 or 12 millionaires in Las Vegas, February 17th and 18th. We are down to 100 tickets. We only have 100 tickets, $199, 2 full days, 20 hours of content, plenty of networking, a party, a concert, food, all this stuff. You need to be there. You need to be in rooms with other people that are positive in doing the work. Trust me when I say the speakers will be amazing. Don't come for the speakers. Let the speakers be the cherry on top. Come for the networking. One of the things you will see with the One Rental at a Time community is we are generally positive and we are generally doing the work. You want to network with these kinds of people. Many of you need new friends. You need people doing the work. Your friends are holding you back. You need to get in rooms with people that are doing the work, networking, are positive and willing to help. That is what One Rental at a Time is. Make sure you are there. Don't know if you saw this, but Ford's executive chair, Mr. Bill Ford, yes, Bill Ford of the Ford name, is calling on auto workers to end the strike. Yeah, the strike's been going on a month. This is going to be very interesting. Who feels the pain first? Obviously, Bill Ford, executive chair, is seeing some problems in the supply chain and units and all of that. We also heard the other day that the strike is now 30 days old and you're getting $500 weekly strike pay. It's got to be tough all the way around. It doesn't appear that they're any closer to a deal. Let's hope one gets done and we can move forward. But yeah, pretty interesting. On the top of retail sales, we have hit another peak in the 10-year note. I just looked, it was 4.83. It may be something different at this time, but it was just 4.83. Why is that important? Because remember, last Sunday, the Fed pivoted. Last Sunday, the Fed said the market is doing our job. The market has raised the Fed or the 10-year note about 45 basis points since the last meeting. That is almost 2 rate hikes. Almost 2 rate hikes. So the Fed, in my opinion, is done. Even though retail sales was a barn burner at 0.7 nominal, 0.3 real, they're done. They're not going to be raised in the face of this. There's a lot of stuff coming. To that end, the default risk in the junk bond market stands at about $2 trillion. That is with a T, $2 trillion between 2024 and 2028. Moody's is saying default and refinancing risk are climbing. No kidding. If you are in the smaller or even mid-size and you're trying to roll over debt, it is going to be very, very tough and probably very, very expensive. So again, there is a lot of companies that are going to cease to exist or they will be sold for parts or whatnot. This is, as the All In podcast has changed, it's not survived to 25, it is now survived till 2026. Get your burn rate right so that you can pay off your debt. What else are we talking about? Oh, let's do bank earnings and some earnings real quick. Again, we are in the throes of it. Goldman Sachs beat top line, beat bottom line. They did take a $506 million write-down, aka loss, on their Green Sky investment. They also wrote down $358 million in real estate impairments. That just means the property on their balance sheet is worth less, so they wrote it down, which will show up as a loss in their income statement. Bank of America beat top line, beat bottom line, but noted that consumer spending continues to slow. Albertsons beat top line, beat bottom line, had good online sales. But here's the deal. Oh, let's do one more. Bank of New York Mellon beat top line, beat bottom line, had positive net interest margin. We need to have this conversation. You just heard me say that 4 companies beat top line, beat bottom line. That just means they beat expectations. Most of these companies saw year-on-year growth negative double digits. So they are taking this quarter comparing to last year's quarter, it's negative. This is all an expectation game, and they are playing the expectation game really, really well. Let's congratulate somebody doing the work. Yesterday we congratulated somebody who got the golden ticket. Now we are congratulating somebody for getting their next deal. Brandon, congratulations for getting your next deal. Very happy for you. Your card will be out in the mail. Folks, if you have done a deal and One Rental at a Time has helped you and you don't know how to get me your address, there are two ways. One, you could direct message me on Instagram. Yes, you can follow me on Instagram. My channel is One Rental at a Time or Page or whatever they call it. You can send me a DM on Instagram with your address and I will mail you a card. In that statement, tell me if it's a golden ticket first deal or a black card your next deal. Or if you don't have Instagram, you can go to my website, onerentalatatime.com. There is a spot where you can reach out to me via email and just say, Michael, I closed on my deal. I would love to get one of those cards and get a shout out on the daily financial news. So just like Brandon did, Brandon, congratulations. That is amazing. Again, folks, thank you for all the contributions on the Meet Kevin video. I thought that was great of all of you to reach out and say, hey, have Michael back. We'll see if he brings me back. I had a lot of fun. I think Meet Kevin is a very interesting young man. I did think it was weird that he was eating at the end of the video. I don't know what that was all about, but hey, that's okay. It is what it is. But at the end of the day, one rental at a time, do the work. Remember, if you are ready to learn your market, you are ready to figure out your buy box, we still offer that amazing course at only $3.99. How to get started one rental at a time. Gets you access to a private Facebook group. It's amazing. Also, thank you for checking out my channel, Best of ORAT. We posted that Day 4 boot camp with Jason Pritchard. A lot of you have watched that. Frankly, more of you should watch that. I am serious. Jason gave wealth of knowledge. If you don't take the opportunity to watch that 2-hour video in the next 6 days, you are going to miss out. All right, folks, take care. Have an amazing day. Bye.